Folks, hello and welcome to Entrepreneur Extraordinaire. Thank you for joining us. We know your time is valuable, so we're going to cut to the chase. In this video, I'm going to give you only one big tip that's going to save you and take care of all your taxes. If you have filed your 2020 tax returns, oh my God, you're going to watch this video and say, I wish I hadn't done that. But even if you did, that's okay. It's okay, we got you covered because you can always file an amendment. So if this interests you, stick around to find out. Hola, ¿cómo estás? Namaste, salam, kaif halik, konnichiwa, ni hao to all my friends all over the world. Welcome to Entrepreneur Extraordinaire. So in this video, I'm going to simplify everything for you so easy that it's just in layman terms. You can either do it on your own or you can take it to your tax professional. At least ask them the questions that I'm telling you about. To save on taxes, you need to do one thing and one thing only, which is what? Reduce your taxable income. There is gross income, or the income that you make from your paycheck or from your earnings from your small business, and then there's taxable income, okay, which is minus all the expenses, right? It's simple. Taxable income is completely different than regular income because it has all these other expenses built into it. Charity, pets, medical expenses, student expenses, books, blah, blah, blah. Right. Do you have an elderly person in the house? Do you have medical expenses? Do you have a dog or a pet that is a service animal? Do you have children? Do you have a house? Do you rent? All these things, folks, you're in luck. All these things will save you taxes. Your tax gold mine and your tax savings is sitting right under your roof and you don't know it. So first things first, if you have a house, okay, and you own the house, you have a mortgage, you must register a business, okay? If you don't have a business and you're an employee of some other company, call your employer, tell them, I don't want to be on W-2, I want to be on 1099. Why? 1099 has immense and a lot more benefits. When you're on 1099, you can be a business, okay? So you go to the county, register a business, it costs you $70. Boom, now you open the door to all the tax benefits. So once you have a business and you live in a house, whether you rent the house or you own the house, it doesn't really matter. If you have a house and you live in a house or have a roommate, doesn't really matter. You can register a business and claim your home as an office, okay? Even though you go to another office, if you have two offices, if you have two offices, that's fine. You can deduct both as an expense on Schedule C, okay? And if you have any issues, please contact entrepreneurextraordinaire.com. I'll put the link below and we can help you with that, okay? So that's one thing, right? You can claim your house as a deduction on your taxes. If you have filed your taxes, make sure you count for everything. House utilities, office supplies, your new iPad, your new iPhone, your 5G phone, blah, 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 your printer, your scanner, whatever that may be, make sure you put that in your tax form as a deduction for your business, okay, for 2020. All right. Number two, do you have dogs and pets? If you have a dog, you can register a dog as a service dog, okay? So you have a service dog, any medical expenses, vet visits of that particular dog or that animal who's helping you, assuming it's a dog, is tax deductible. So do you have cars in your house? You're in luck if you have cars, because guess what? Once you register yourself as a 1099 or a business, you can start claiming deductions for your car, and not just like regular stuff that you watch on the internet, right? Like what is it? Car mileage and going to work, coming back. No, it's more than that. Your car also has depreciation. When you're selling your car, you can claim depreciation on your car, okay? Or you can have that depreciation every single month. Or if you lease your car under the business name, okay, here's another tip for you. Lease your car under your business name, then the entire payment for the whole month is tax deductible, given that you use your car 80% of the time for business. Well, granted, you have a business and you register the car under the business name. Also make sure when you have a car, right, and you go register the car and title the car in DMV, there is a column called personal use or business use. Make sure you put your car as a business use. If you do that, then your car is all for business. Okay. Not only that, but guess what? You can also deduct, any charitable commuting mileage, okay? Any medical expense mileage in your car deduction. So what else can you do with your car? You can do more with your car. You can actually use your car as an advertisement. You can go to ratify.com. They can wrap your car with nice advertisements. You can also claim that as deductions and your income. So your car's Car is a gift that keeps on giving. Car used to be a liability, but if you use it in a smart manner, which is what I'm telling you, it can actually be an asset for you. So not only that, when you're traveling for business purposes and you have a business or a 1099 or corp to corp, you can also use your car to pay tickets, okay, any tolls for business. Let's say you go to a meeting and you get a ticket and you're having a lunch. Well, that ticket is tax deductible, okay? So put that in your tax returns. So that's a very good tip that you must use. Tickets, tolls, parking fees, overnight parking, airport parking, all those are deductions for your car. So just car itself is giving you so much money back, again, if you register the car under the business name, right? So that's the key. So next is if you have an elderly person living in your house, your dad, your mom, who have medical bills, you may have a caretaker coming to your house taking care of them. All that is tax deductible. You can claim them as a dependent on your taxes. Your spouse or you, or if you're a single person, you can still do that. Make sure none of your siblings are doing it, because that's a tax an audit, but make sure that you can claim them as a dependent, and make sure that any help that you're getting to take care of their medical care, even if it's in-house medical care, you can then claim that in your tax deduction. So that's a simple way of saving some money. So having an elderly person is actually a blessing. It's not. Now let's talk a little bit about PPP loans, right? So a lot of people got PPP loans, and those of you who don't know, I can put a link down below. But if you had PPP, okay, those loans by the CARES Act are actually forgiven loans. That means you don't have to pay them back. So that PPP check that you got for $5,000, $10,000, $20,000, I don't know what you got. I hope you got $20,000, but if you did or did not, those are not to be included as part of your income or part of your taxable income, okay? So don't add that. Now, if you were unemployed for some reason in 2020 and you're wondering, like, I got, $2,000 every month as a check, do I need to report that? If it's less than $10,200, you do not have to add. So do not add that in your taxes. And if you get a letter from IRS, you tell them that, I made less than $10,200 from unemployment. That's why I did not put that in my tax return. Okay. So now if you're paying medical expenses, you have any medical surgery, and again, if you're on a 1099 or if you have a business or a corp to corp, you can claim those medical taxes because your business is taking care of you and your health. So how cool is that? What's different in this video versus other videos is that I'm telling you things in a simplified manner for those people who are not tax snobs. And not only that, I'm going to give you a link below for all the forms you need to download and where to put what kind of expenses. Okay, it's all about adding up your expenses. So your taxable income, remember I talked about it, taxable income gets lower and lower. The lower the taxable income, the lower the bracket you're in. And I can put a chart here of the tax bracket that you can download from the internet if you like. So let's say you don't own a house, you rent the house. Again, the same rule applies. If you're renting it, you can claim the whole space as a rental office. The place where you live and the section where your office is, you can separate them out. Anything in the office, the utilities, the gas, the electricity is tax deductible. Granted, again, if you are registered as a business. So very, very important, right? Register yourself as a 1099 or a business, and you'll have immense amount of taxes. And you're going to thank me on July 4th because you're going to have a lot more money in your pockets by keeping the money. Remember, folks, it's not what you make, it's what you keep. And if you're keeping the money that you're earning, through a business or through 1099 employment, then you can be ahead of the curve much, much faster. Now, if you have children, and you're married or not married, you have children in your house and they live in your house with you, you can also claim your children, first as a deduction of being a dependent, but also secondly, if your children help you with your business, you can also pay them a salary and also have that deduction in your taxes. So like I said in the beginning of the video, that everything that you do in terms of taxes and deductions are around your house. So look around your house for other things, utilities, putting a solar roof on your roof panel, children, an elderly person who's living in your house, the car you drive, they're also tax deductible. So I'm sure you've heard about 401k and Roth IRA and IRA and self-directed IRA, but you may not have heard about MIRA, which is called MIRA. MIRA is a beautiful, beautiful also tax contribution. I would call it a bucket, is to simplify in simple terms. You can Google about MIRA and its benefit, but essentially you have our tax-free contributions that you can make to your MIRA account each year. I believe there's a cap to it, and I don't remember the exact cap, but look into MIRA contributions, and it's free. So you can open a MIRA account and start contributing to that, in terms of having another account which is also tax-free. And you can take all that money out from MIRA once you're 52 years old and above, tax-free money. So I hope this video was helpful for you. Having taxes and doing taxes is very, very simple. You just got to look around your house, look for children, look for pets, look for a car that could be serving as a business, look for a house that could be your office. And remember, we talked about renting, we talked about mortgage deductions, right? All the interest in the mortgage that you're paying at your house is tax deductible. So please ask your tax professional. And if they don't know, a lot of CPAs don't know how to save on taxes. They know how to file taxes, but they don't know how to save on taxes. If you need any help, again, call us, talk to us, call Council Capital, go to entrepreneurextraordinaire.com, register, give us your email, we'll send you more tips for free. But I hope you enjoy this video skit. I'm gonna make a separate skit for single moms who are filing taxes this year, because a lot of my clients are single moms and they keep asking the same questions over and over. So I want to make sure I give them the best advice possible and help them out. So I hope this video was helpful for you guys. If you liked it, if you think it added value to you, and it was simple enough for anyone to understand, that's the goal of this video. It has to be simple enough. If it was simple enough, please press a like, subscribe, and a notification icon so you get notified when when we release a new video. Thank you very much. Have a nice day.